And welcome back to today's Retirees with Certified Financial Planner Wayne Maslick of Great Lakes Benefits and Wealth Management. On today's program, we are talking about end-of-the-year tax planning. Now, whether you are, a retiree or a near retiree, there are things that we should be looking at as we progress through the year. And some folks have been blessed mightily. They have wealth, and maybe they don't need it. Maybe they're just concerned about their charity, whatever. But folks donate things. They donate real estate, automobiles, boats, money.
Mm-hmm. They may not be blessed with, say, the wealth of owning a boat. They may be cursed with it. So this may be a good time to unload it.
That could be
if it's been on Craigslist for 6 months and you can't sell your item, your car, your boat, your camper, whatever it is, for what you think's a fair value, you can always look into donating it to the various organizations that are in the business of that. They'll take your donation. You get a good tax deduction for it, and then they take it and they go sell it on their national, network, eBay or whatever it is. But, and again, you don't just do it to do it. You want to see if you do it, will it help you? If you're itemizing your taxes, that's when it may come into play, where you can get a nice, considerable charitable deduction. Not everyone can take their charitable deductions, right? If you just do the short form, and you get your standard deductions and exemptions, a lot of times that's not going to help you.
Sure.
But in the cases where it can help you, you certainly want to think about it before the year end.
Now, if you give an asset like that, a car or a boat or something like that, do you take the fair market value as far as the tax write-off? And then the charity does whatever they need to do?
Yeah, they're going to give you some type of certificate that you did donate it, and what they feel the fair market value is, which is generally higher than what you're going to sell the item for, from what I've seen.
Okay. Now, the same thing as far as just stocks, bonds, anything like that. Is that the same kind of?
Well, now you're getting into a little that's a little trickier.
Okay.
That depending on the amount of the stocks, the investments, the real estate. Now we're talking charitable trusts and a little more complicated on the tax side. A lot of times that's hard to do prior to year end if you're just starting to think about it now. You want to think about that. Talk to good attorneys, good CPAs.
Sure.
Make sure you're doing it the proper way. There's ways to donate large assets where you could receive income for life. You can set it up to where your kids get the asset back, or at least the value of the asset. There's all types of ways to do that. We're really not talking about that today. I'm talking about the quick, more the quick, average Joe type steps. Now,
what about deduction stacking? What is that?
Yeah, we've talked about that on the shows in the past, and it's a pretty simple process. If you know about it or think about it, then you can work with your CPA to see if it makes sense. But a lot of folks don't itemize. They don't do the long form because they're just not quite there.
All right.
They give to their church. They may have some mortgage interest. They may have some property tax and state income tax, maybe even some medical bills they can put towards their itemization. But it just doesn't get them over the standard deduction. They're always, close, but they never can do it. And then maybe they're even thinking, why do I even keep track of all this stuff? I can't itemize anyway.
Right.
Those folks may consider what's called deduction stacking. And deduction stacking is paying this year what you normally have on the agenda for next year. So if you tithe or you give to your church, say, $5,000 each year. So this year you got your $5,000 in. Next year you're going to do $5,000. Well, you may want to consider just giving next year's $5,000 this year.
Okay.
So now they got $10,000 put towards charity.
Okay.
And maybe even your property taxes. If you owe your taxes for next year, pay them this year. Pay next year's this year. And you could, in a lot of cases, pay your interest ahead and maybe some medical premiums. Whatever the case, everyone's different. We always talk about that. Everyone's got a different situation. But there are ways where you can double up now to get you over that standard deduction. So now we start itemizing. We take the larger tax write-off.
Sure.
So that's good. Then next year, we just take the standard deduction.
Go back to
because we
the-
used it all up.
Right, okay.
But then the following year, we double up again.
Okay.
Every other year you deduction stack, and then every other year you take a standard deduction. Doesn't work for everyone, but it's a great tool, again, for the proactive person to lower their taxes.
Right. And that's the key, folks, being proactive so that you take control of your finances and your tax planning. Call Wayne, 866-626-3990. Now, if it's on the weekend, leave a name and number, and one of the ladies will call you back and set up an appointment, or at least discuss the situation to see if you need an appointment. But don't put it off. Call today.